Hey, fellas, look what I found in my pocket. Look, a year's salary right here. What I call them? Fun coupons. See that? A fun coupon.
I'm on the sloop, John B. Grandfather and me. Around.
What is going on YouTube? It is I, Brendan from Market Makers Senior Frosty Returns. I hope everybody had a fantastic weekend. I'm starting to feel a little bit better. Thanks for all the nice comments in the last video regarding my health. I had a bad cold or whatever I had last week, flu or something. But guys, these markets, you saw the thumbnail. Death cross incoming. What does that mean? We are at a key pivotal point in the marketplace in all of the indices, and you saw a God candle on Bitcoin this morning. We're going to talk about that as well. Key pivotal moment in the markets. If the markets can break out and rally from here, they have to break out. I'll show you the pivots they got to crush and break out. This will be your rally going into the end of the year if earnings are good, et cetera, et cetera. That's 80% of Wall Street believes that's what's going to happen. Now, as you guys know, this is the advanced double top channel. We talk about double top so much because they present themselves so much. Look at the NASDAQ. I've been tweeting about this. If you haven't followed us on X yet, I'm going to pin it in the YouTube comments, but everything is in our video description, guys. By the way, please do take a moment to like and subscribe to this channel. It helps us out in the algorithm. But when you look at death crosses, when I first came to crypto in spring of 2021, remember Bitcoin was getting super volatile. We have super volatile markets right now. I saw tons of articles. I saw tons of commentators talking about, well, death crosses don't really mean much because I look back at the last 20 death crosses and it can vary. You can have a 3% drawdown. You can have a 50% drawdown. Nobody really knows. Well, the truth is you do know because you have to understand the market you are in. Since March of 2009, when the S&P hit 666 at the bottom, you have been in a secular bull market, meaning the direction was up off of the bottom. So of course on pullbacks, if you have death crosses, they will not be as pronounced. When you are entering a secular bear market in the 7-year cycle, which is how I believe we are trading now, then what we just had was a bull run, basically a bear market rally, a bull run in a secular bear market. Death crosses have a much more pronounced effect. The last death cross I'm going to show you on the S&P dropped the market 20+%, dropped the NASDAQ even more. The last death cross on Bitcoin dropped Bitcoin 70%. Again, secular bear market. I'm going to give you the trades to look for, the setups to look for. Guys, if you want to trade with us, you want to help support the channel, come check out our Discord. It is a lot of fun. We put trade signals. My last 3 trades now on the S&P have brought in over 250 bars. My last 2 shorts I did on Bitcoin have captured over 11% of the movements. Obviously, you apply leverage to these things. Fantastic trades. Mark in our room, one of our senior traders, senior staff trader, he posted the long on the S&P at the bottom at 4204. Captured a nice rally all the way up to 4,400, almost 200 bars in a single trade, and along the bottom of gold. And gold had a God candle due to the conflict going on in the Middle East. So guys, check out our Discord. And if you want to join and you don't want to pay, BingX and SimpleFX will pay for your first month. Download one of those apps. Guys, check out SimpleFX to trade everything. And with our link, you do get a double first-time deposit bonus. SimpleFX, guys, fantastic place to trade. BingX has all the cryptos and no VPN needed. All the cryptos, all the myriad of the meme coins, pump and dump coins, anything you guys want to trade is on BingX as well. All right, guys, so let's get into this. What's up? What's down? What does the market look like it's going to do? This is a volatile market. This is why I love bear markets. You get volatility in these down cycles. It's a lot of fun to trade. VIX is coming off of its high. You got up to over 20 for the first time in this range. You're at 17.5 right now. Much much higher, obviously, than the 12s and 13s you're putting in. Not doing a whole lot. Don't really care about the VIX, but all you guys requested for me to show the VIX. Looking at the 10-year, yields gapped open this morning. 10-year pushing up at 4.7 right now. Now, remember, guys, how many people told you last week to watch the auctions? Wednesday, we had the 10-year. Thursday, we had the 30-year. Both were at 1 p.m. Eastern time. And what happened on Thursday, exactly at 1 p.m., a couple minutes after Eastern time? The market sold off, and look at the yields. Boom, Thursday, massive, massive move in yields. This is a bunch of different reasons why this happened. Supply, we're running record deficits, going to be north of $2 trillion in deficit, meaning we're just spending money we don't have. All that debt has to be monetized. And then you have the combination effect of other countries aren't stepping up to buy. The Fed was previously the largest buyer of U.S. debt, and they're not doing that. They're doing quantitative tightening, which means they're selling the debt as well. I don't remember what they have still, 8 trillion or something on their balance sheet. So you saw yields do a 4% move in a day. Now, if you look at the news articles from that day, they all said, well, investors and traders got spooked by the slightly warmer inflation, the 0.1 warmer inflation. Yeah, and it just so happens, coincidentally, the markets dumped at the exact same time the yield spiked, at the exact same time the auction went poorly, okay? You have to watch this because I don't think this is going to get better. Nobody wants to buy our debt. Our debt's actually been downgraded, as well as the fact that we just keep printing and spending, printing and spending. You have a bias for yields to continue to go high, and it's the volatility the market hates. Gapped open, yields are pushing up, but so are markets. But why? Because you guys know here at Market Makers on the Double Top channel, they're doing that because it's a reflexive algorithmic buying move as well as a retail BTFD move. What is this doing to the DXY? At this point, the DXY is essentially being dragged up, okay? Dragged up with yields. And the DXY is still hovering this 106, 107 zone. When you can break 107 spot 348, okay? When the DXY can do this, and maybe doing this now if you put in this W pattern double bottom, okay? When you can break that and get above 107, you saw what the market did when you got up to just this level right here, which is, where are we at on price? 106.787. You had the S&P drop dramatically, all 80 points. And that's also when yield spikes. So we know the direct correlation here. And if you get to 108, guys, this is just constant pressure on the marketplaces. And that could be what you could see. And we're going to look at how this is reflected in the indices. Now, the death crosses. Let's look at the death crosses. 50 simple moving average, 200 moving average. Look at the hard slope here on the Dow, the baby S&P. The Dow was the only indice that fell below its 200 here in the USA, okay? Struggling down here and trying to get a pump candle back above it as well. But you can see the death cross coming in. I'm going to show you what this means on the S&P, okay? That's the largest market, the largest equity market. That's what we want to track. That's the Bitcoin of the crypto space, is the S&P. We want to track that and see how it's presenting. So be aware. Here's your death cross coming in on the S&P. And again, what did this do last time we got a death cross, right? What was the drawdown last death cross? Went ahead and threw it on here to save us some time. Go ahead and shrink this up. 24% drawdown last death cross. We had the death cross. Markets rallied, took it from the high after the death cross. Boom, 24% drawdown. Okay. So again, understand in a secular bear market, which was starting to form here, you get much larger drawdowns and you can see the cross incoming here. Now, how can this be avoided? Well, let's look at this. I'm going to show you the key levels, TA perspective, what has to happen. And then I'm going to show you what I was tweeting about on the NASDAQ, how we're performing the exact same pattern for the third time, making a clear double top, providing potential great trade opportunities. We're going to cover that and then get into Bitcoin and Tesla and NVIDIA and the metals as well. So again, this is what you're looking at, guys. This is exactly what you're looking at. You have 200, you have your rally up, right? Here's your dip. Here's your bottom, I should say. Your rally up. Didn't quite get to the 50, sold off. Why does this happen? Because market psychology, the sheeple, the algorithms, they all buy and sell at the same time. This is why you get double tops, an ABC pattern, okay? Big money allows the market to be run up. They switch to sell, algorithms switch to sell, and then you start getting candles, and then retail realizes that everybody sells, and then a bottom comes in because people see the price of assets. Oh, wait, that's a good entry price. I think the market's going higher. You get another top, and then you get a breakdown. Big money, algorithms flip the switch, and you break down. You change levels. And this is what's happening right here so far. And let's look at this. What would you have to do to avoid this? On an immediate level here on the S&P, you have to take out this pivot, okay? This is why double tops can be fun to trade. This was Gartley's pattern back in 1938 showing this. You have the 50 laying almost right on top of price. The 50 moving average laying right on top of price. 44.01 is your high. You're at 43.79. And what you want to see in a traditional double top is a high, your low, and a lower high, and then you get the breakdown, breaking your neckline, right, with downward pressure. So the way that I like to trade these moves is look at your fibs, get your targets if you think the market could potentially be in some trouble. And this is a reflexive rally. 786 is my favorite fib to trade double tops at. 43.82, got just above it, holding below it. And then I always put my stop loss. I either use ATR or market structure. That is average true range as volatility, okay? So this is what I'm looking at for a trade setup because, again, the move to me, and we're going to talk about who's expecting this and who's not expecting this, the move to me could easily be this, okay? Can we still get that seasonal rally? Yeah, we could, but we could be falling below the 200, right? For the winter solstice rally, the Santa Claus rally, we could be falling below the 200 and back testing it, and that could end up being the rally. Now, in one corner, you have Tom Lee plus 85% of Wall Street, right? Or let's say 80%, Pareto distribution. Tom Lee and 80% of Wall Street, what are they saying? They're saying stocks will finish higher at the end of the year. Right? That's the narrative in the marketplace. Then you have your Mike Wilson. He has a target of 3,900. Marko Kolanovic, 4,100, 4,000. Again, we're at 43.79. These are lower targets, right? Both those targets, by the way, take out the 200, take out your pivot low. So all of this will be determined near term in the market. If you can flip 44.01, stay above it. Get on top of your 50, obviously. Maybe you have to do some type of back test, get your low, higher low structure, and then come up. And then, of course, you have your higher level pivots you'd have to take out. But that's your near-term threat. And right now, if you don't take this out and you don't take these out, these double tops we're going to go over, if you can't take this out and you do get rejected here, and tomorrow because yields are up, DXY pulls up, you get another down candle, you break this down, death crosses are hard to predict because they move at the velocity of the candles, right? You got to pump up, so you get the 50 starting to flatten just a slight tiny angle. If this comes down tomorrow, you're going to see the 50 start pulling down more, 200 still coming up. There's prediction indicators on TradingView for death crosses, but again, it matters about the price action, right? That prediction is going to change. You get a pump candle, it could push it out a couple days. You get a dump candle, it could bring it in a couple days. But based on what I'm seeing here, I mean, this could happen quicker. It could happen by December. We don't know, guys. I put a prediction indicator on here to look at it, and it had December 7th, but that was prior to the pump candle. So again, it just varies. But this is the trade setup I'm looking at here on the S&P because this is an easy idea for a trade. I know that if we get above 44.01 and get above the 50, most likely you're going to try to move up higher, right? So it's an easy exit point for me. Whereas if you fail and you start pushing down, you have a clearly defined double top just like you made before that brought you down to a new low. And this obviously would be a double top, bringing you back down to your pivot low back at 4,200. If you look at this on the NASDAQ, this is what I was tweeting about. We're going to do Bitcoin next, guys. Look at the patterns in the marketplace, okay? Look at the patterns. Sometimes, people get overwhelmed with, well, I mean, I like this guy and this guy says stocks are going higher. Other people say, I like this guy says stocks are going lower. If you understand technical analysis, you can look at your own fundamentals, your own cycles, whatever you want to do. But right now, what do you have? You have the information in front of you. You have the history. You have the past. The past is the best predictor of the future. We have a clearly defined parallel channel. Okay, clearly defined, being used as support, being used as support, being used as support. You have a clearly defined up channel here as well, a downtrending trend line. And you have double tops forming with almost identical ratios. BD 785, BD 817, retracements of just over spot 50%. Okay, spot 558, spot 534. Does that mean this has to set up the exact same way third time around? No, it doesn't. But as a pattern trader, you look at patterns. You almost tested the exact top of your channel once again. Let's just pull a fib and look at what this is hitting. You're hitting the 618, the most commonly retraced to fib. I like this even better at 15,262 at the 786 because again, it gives me a clear exit point, right? I know if I take out this pivot here, I take out this fractal high and you get a back test and you start moving up, I can get out of my trade knowing that price wants to be bullish. And in that case, would be trying to come to 15.6. Okay. So that's a clear exit strategy for me. So what I'm looking at here, guys, is also sequencing of these candle counts. Let's just look at this. When we made our low in these double tops, the previous double tops, 5 bars, 7 days. That's how long it took to make the next high of the second top, right? Let's go to our low. Up to your high, 6 bars, 8 days. Okay. Right now, you would have 5 bars would take you out to Friday, this Friday, October 20th. 6 bars, because then you have the weekend, would be Monday, October 23rd. Again, does it have to follow that? No. But what you could see is a pullback tomorrow, another push back up, another pullback. Who knows? Or this could be a much more condensed double top with prices moving quicker. Okay. But you just look at the history to help predict the future because what you have is a clear pattern forming, right? Tweeted about this on Friday. I told everybody if you're worried about missing these trades that brought these nice movements, you will get another opportunity. And that opportunity is starting to present itself with the NASDAQ trading here at the 618, 15,195, like it better at the 786, and the S&P already hitting the 786, okay? These are trades you want to look at as potential, good opportunities to take a little bit of risk. Because remember, never trade anything you cannot lose. Let's look at Bitcoin. Again, talking about death crosses. If we look at the death cross on Bitcoin, because again, this is guys, this was my retirement trade. This is why I like to show it. Okay. I retired. I left Merrill Lynch. I've talked about this in my videos on YouTube for days and days on the buildup, testing the 200. Everybody on YouTube said it's going to do this. This is just a correction. I looked at this and said, uh-oh, death cross. Uh-oh, we're in a bear market. And then what happened? We tested it and Bitcoin fell 70%. 70% when you're using leverage, especially in crypto, let's say 50x, massive, massive rewards. Understanding what death crosses mean is directly tied to the market cycle that you are trading. And I cannot reinforce this enough. Bitcoin just once again made another death cross. Okay, let's look at it over here. So Bitcoin made a death cross. It made it, when did it make this death cross? It made it on roughly September 11th. And we had a God candle today. So let's look at this. Now, as I was getting ready to record this video, I saw the guys in the Discord talking about this, and one of them said, there was news that BlackRock ETF for Bitcoin got approved, right? And then you saw this candle, and then it came out that was fake news. I don't know. I didn't see anything specifically about that. I was watching Bloomberg. They didn't mention it at all about a ETF being approved. So most likely, if that was leaked somewhere on one of those crypto, garbage news sites, then and BlackRock denied it or had no comment or whatever. Obviously, they would announce they would be excited if their ETF got approved, and Bloomberg would have picked it up. But that may have happened. But looking at the candle, it looks like it did not happen. Okay, so we have a death cross. You have all the other markets. Remember, Bitcoin being more volatile, Bitcoin has its death cross. The metals have their death cross. You want to see what Bitcoin can do here. Now, barring this candle, we had a beautiful double top setting up right where Bitcoin is now, 28,125. The pivot high, the fractal high, you got to knock out 28,566, get on top and move up to take out your next fractal high, roughly 31.8, right? But prior to this candle, let's go ahead and look at this. Because this was setting up just like the S&P, just like the NASDAQ, for a nice market maker's double top trade. And that's where you're stuck, right at the 786, 28,128. The 786 is a square root of 618. Okay, if you look at the great megalithic structures in the world, this was discovered by Bryce Gilmore. They have the ratios of the square root ratios as well. The golden triangle, 786, 1272 being the square root of 1618. So you guys notice on my fibs, I use the standard fibs of 382, 486, a Kepler number, 618, 786, one fib, 1272, 1618. Those are my primary fibs being the 618, 1618. But my intermediate fibs of 786, 1272, those are the square roots of the other two. So they're very important fibs, and this is where I like to trade double tops at, is right at the 786. So you did have this big pump candle. You have to be careful here because clearly this thing can move. Clearly the markets are still trying to move up as well. But if this holds, good area looking at resistance. Prior death cross, you have a death cross. Now, Bitcoin, this is a much tighter death cross. If Bitcoin is actually able to keep this trend, then you would obviously see this turn into a golden cross with the 50 going into the 200 and up. But right now, you're stuck at the 786. Watch that level. Next key level resistance, 28,566. Your 100% retracement. And obviously, the target, you exceeded it here, 1618, 29,833. The God candle got above it. If the equities start double topping and pulling down, look for Bitcoin to do the same. It's telling you that already with a death cross, okay? So if the equities double top and pull down this week or early next week, then watch Bitcoin to do the same from whatever level it's trading at. Just be aware of that, when you guys are trading at home. Let's go ahead and look at Tesla. Oh, also, I got my request on X. Be sure to follow us once again on X, guys. I'll pin it again in the YouTube comments. It's also in the video description with all the details of our Discord and everything else. But I requested from you guys what other assets you want to see. And I got too many. 30, 40, 50 different ones. So I try to compile them all, immediately compile them all into the most requested ones. Tesla was the most requested one, which you guys, we do this on the videos, every video, Tesla. So we're going to remove that one. What I'll do is I'll make a separate video only for X. Okay. It's this little incentive to get you guys to join us and follow us on X. I'm going to make the video. Lee will upload it to X. And I'm going to go over, we'll see how many we can do to make the video watchable. I'm not going to give you guys an hour-long video. I'll go over, at least 8 things. We'll see how quick it goes through. If I can knock these things out, I'll have the chart set up for you. Maybe we can get 10, 12 different assets. Okay. And we'll list it. We'll do our best to list it and give you the timestamps if you only want to see one thing. So that's just a little bonus. You guys want to follow us on X. Let's look at Tesla. Tesla's earnings, I believe, are tomorrow. Somebody can correct me in the comments if I am wrong. Tesla's still trading the same way here, guys. 382, 251. Your resistance was the 786 at 269 spot 48. Okay. And again, Tesla has a bunch of different patterns. You have your channel that's been clearly defined for weeks and weeks and weeks now that you've been trading in. Remember, we talked about hitting the bottoms, you can long, hitting the tops, you can short, and now you're in that in-between zone, right? And you have this pattern that's forming as well. We covered this. You have this larger W pattern. Here's your high, here's your low, here's your lower high, here's your higher low, right? And you want to see this breakout. Again, you want to see this breakout above 278. But you have a smaller W that's now forming as well. Fun of trading. Here's your high, here's your low. Lower high, right now, higher low. Okay, you want to see this W breakout above 278. And that will give you those upside targets. If that happens, you're looking at 306. We went over the perfect Tesla trade, I guess, 2 videos ago? You can watch that. 306 is the level I want to see Tesla get to, which it could. It's an uphill battle. It could, but if it does, I went over it, but there's so much confluence there that I like. That's an area I'd like to short Tesla. And guys, right now you're bouncing right on your 50 simple moving average. You see that? I don't use moving averages when I trade. I use moving averages to see what the algos and to see what retail traders are looking at. These are the most commonly used tools, trend lines and moving averages, right? 50, 20, 200. These are the most commonly used ones. So I want to see what everybody's looking at. And right now, Tesla's holding support, waiting for earnings. Earnings bad. You can see this breakdown. You guys already know about the channel. You already see that you have a massive double top here, right? And you can see your fractal low of 234. You start breaking that neckline, Tesla will be going down. So watch Tesla. I'm going to show you race. What's race? We're talking about Tesla. This is Ferrari. Okay. Now, this is an interesting one to me. The beta is lower than it is on Tesla. Tesla beta is like 3 times higher, meaning it's more volatile. But this thing has had a massive, massive run up. And the PE on Tesla right now is like 60 plus. The PE on Race, which is Ferrari, is like 46. Again, the average in the car industry, which Tesla, you can argue, is a tech company that happens to make cars. But Ferrari is obviously a car company, right? Maybe they make apparel, keychains, things like that, whatever, but it's a car company and they have a massive amount of debt. They have half as much debt as Tesla, but yet the market cap for Ferrari, I think off the top of my head, was like 5 billion. Tesla's like 87 billion, and they have half as much debt as Tesla, right? So they have a lot of debt for their cap. And when you look at this, again, watching the 786, 320 on Race, why am I looking at this? Quite simple. Look at the massive double top structure you could be making here. Again, I would be looking at this. I don't like to short individual stocks unless I have confluence from the indices, right? If the indices double top out and start to move back down, this is the move I'm looking at for Race, for Ferrari at 320, tradable on SimpleFX. Check out the app, guys. But that's what I like to see. And they report earnings November 2nd, right? I think that's the day after the Fed. So you have some catalysts coming in, but that's a potential good area to look at. And let's go ahead and look at NVIDIA. Everybody's trading NVIDIA, right? You're chopping around guys in a range. And when you look at this, I mean, pivot high, you got to take out 502. This hasn't changed in a while. And you do have a low, a higher low, possibly a higher low once again. We'll see, right? So you want to see at some level this W pattern, the whole market for, especially with Fibonacci patterns. You guys see me use these X5 patterns all the time. Let me go ahead and get rid of that so you can see this. But you see me use these X5 patterns all the time. These are Fibonacci patterns. And you're looking at retracement levels. But the majority of my trading is done off of M and W patterns. M being what? An ABC correction, which is also a double top. W patterns, which is your low, your higher low, or it could be a deeper low. And then you have to understand how to use these Fibonacci patterns. But this is all you're looking at. If this is your low right now, you want to see this break your B point, your pivot, right? You want to see this break your B point, come up, take out your previous X pivot of 502, and then you can look at your upside up there at like 560, right? You can look at your upside at 560 and look at the ratio between B and D. It just gives you the 1618. Is this any different than just pulling a fib? If you understand what you're looking at, no, but a lot of people like visual aids. So you can draw it like that. You can see I have my fib pulled and you have the 1618 up here, right? And that's what you want to see. You want to see this take out 502. You'd have a bias to break to the upside and move towards 560. Markets start rolling. NVIDIA, I don't remember when they report, but if their earnings are bad, you're going to see this breakdown, and then you just look at your fractal lows. It's really that simple. The hardest parts is understanding the cycle and mitigating your risk, right? So let's go ahead and look at this. Let's look at gold. Gold moved up. Now, gold had its death cross on September 26th, roughly. Okay. Does that mean you can't pump out of it? No, it doesn't mean that. Obviously, we have a conflict, but why did you get this massive God candle for gold? Remember, God candle is very asset to asset, but this is almost a 3.5% move. It's a God candle for gold. Okay. Big move up, because what happened? You have what's going on in the Middle East. And I received another email from YouTube talking about words I'm not allowed to say. So I'm just saying Middle East. Everybody knows what I'm talking about, right? So this is why the channel's not monetized. This is a fear trade. In the same reason you can see oil popping up, right? So if that conflict spreads, which is the big fear, you can see gold move up with it. If the conflict doesn't spread or stays contained, or the market gets over the fear trade, this death cross is going to mean something more, okay? Right now, you have this big outside catalyst of this potential, well, it is a war, but you have this big outside catalyst of a war going on. So you have gold shooting up, but I would just be very, very hesitant, guys. Like I said, I own physicals. I'm not trading myself. I'm not trading long here because I don't like the upside risk for this, right? This right now, I just look at the cycles, and with GFC, we've been over this so many times on gold and silver, but gold, the metals do horribly prior to a recession. When the recession comes and the markets fall, you'll see money fly back into metals. Again, this is just based off previous cycles. Gold fell 34%, bottom before the equities, and then rose up, recovered much faster, which is exactly what I think is going to happen with the cryptos, by the way, specifically Bitcoin, okay? But I don't like it here. I don't like it here at all. If you got in here, like where Mark posted his trade in our Discord, awesome, awesome move, right? But I don't like it here because this can too easily reverse. You have a death cross in a bear market. Maybe you can get more upside, 1969. Heck, maybe you can even retest the highs of 2067. And you start doing stuff like this. And I'm looking at 69, 2012, 2067. I'm looking at shorts. Okay, which I know is counterintuitive, but I'm trading the market cycle. Okay, and I know that JP Morgan and Citi represent 80% of the paper trading. Just those two houses represent 80% of the paper trading in metals. And these things are the first things to go if the markets roll. Remember, gold was moving with the markets prior to the God candle. So got the death cross, too many warning signs, not longing here. I'm just cautiously waiting for a nice trade setup because what would make my decision easy? You already see this forming right here potentially. Look, you have your move up. You hit your, what is that? That's your 200. You hit your 200. This is your 50 beneath you. You have your move up. If you come back down, do something like this, do something like this, then what did you just make, guys? I mean, we talk about it, double top, right? Same thing you did here. Same thing you did here. All of these are potential trades you can take and understand the market cycle you're trading in and get these big moves. This is something I'm looking at. And again, if it breaks out, moves up, I'm looking for it to make this structure at a higher level. Let's look at silver. Silver also made its death cross a couple days after gold, September 29th. And silver's below our long-term trend line. Had this on the 3-day chart. This is the daily. So I could show you the death cross. Long-term trend line, guys. I mean, this trend line goes to this first high you put in the cycle back in August 2020, right? Pandemic times. Took that trend line, dragged it down. As you had this for months now, obviously, but you can see how many tops have struggled. Got above it, struggled, fell apart. Got above it, struggled, fell apart. This is their best breach yet. Got above it multiple times, fell back below it. This trend line is the God trend line. You have God candles, right? So this is your God trend line. And unfortunately for silver, what it needs to do to really make any progress, it's got to take out this first fractal high here, okay? And that fractal high is at 23.64. You're stuck between the 618, the trend line, beneath the 50 after a death cross. 786 is above you as well, 23.016. Obviously going to move for the most part, not a one-to-one correlation, but with gold as well, okay? So you want to watch that and see what it's doing. Let's look at oil real quick. We'll wrap this up. I did not mean to talk this much, guys, but I'm getting my voice back 31 minutes in. So oil, again, everybody's expecting, all the big houses are talking about 130, 150 oil. A lot of big YouTubers are talking about it. And is that possible? Absolutely. If you have that conflict spread, you could see oil really shoot up. But for right now, oil producers aren't really involved in this, and this is where you're at in oil. So oil, you have oil trading at 87.26, and you have the 618 at 90. You got to flip 95, guys. You flip 95, oil has more upside. You don't flip 95, then you're just kind of stuck in this range for right now, barring an expansionary catalyst, which could easily happen. Nothing in these types of events goes by the book. Guys, I hope you have a fantastic day, fantastic trading day. Watch those double tops. So sick of talking about them, but they can make you a lot of money. Watch our next video on Thursday. This video will also be on X. Please do like and subscribe. Check out our sponsors. It helps support us. And I hope to see you all in the Discord. Take care, everybody.